Hello guys, welcome to the Trading Parrot. We're going to look into general markets, have a look at some stocks, indices, dollar, gold. We'll cover some TA by the end of the video, but we'll start looking at what's going on in the macro as well. One of the biggest questions that we are seeing across the market is the government shutdown end. It really matters because there is a lot of data that is being held from the public, including CPI, jobless claims. All of these metrics are usually used to trade, to understand direction of the market, but without them it's almost like free for all or driving in the dark. There is a sudden burst of optimism that government shutdown will be resolved in the next few days, according to Polymarket. We get a 40% chances increasing by 10% overnight to end the shutdown between the 23rd and 26th of October. And the odds of past October into November are decreasing. The Fed pumps another 2 billion into the banking system. This is another area that is a source of fear at the moment. A bank collapse is perceived by Bitcoiners as an opportunity to add to their bags of Bitcoin, but banking system collapsing for general markets, it's not the case. It's definitely seen as a potential for a black swan event. Like the self-correcting facility reveals real-time cracks in the banking system. That's a total of 15 billion in 4 weeks that it's being consistently injected, and this despite the shutdown of the government. And maybe it's not a matter of the size that is being injected by the frequency, which is giving a hint of urgency in this area, definitely. Now, looking at new assets that we normally don't cover, natural gas is extending the rally now with a 12% on the day yesterday, now on track on their largest daily increase since July 2022. Energy costs are rebounding as winter demand expectations are rising. And when it comes to real estate, there is a huge gap at the moment between home sellers and buyers. We're talking about almost 500,000. That's the largest gap ever recorded in history. And if you think that this gap is bigger, you are seeing it upside down. That is a lot of buyers over sellers. The blue on top shows how many sellers there are at the moment. And the bigger the gap, the bigger the risk of a recession triggered by real estate. Now, people prepare for this sort of events in pretty much a single way, accumulating cash on the sidelines. And at the moment, we have 7.5 trillion of cash sitting on the sidelines. Now, that is just considering cash. But if you include how much people are accumulating on gold and money markets, we're talking about 35 trillion that could come back into the markets if the fears go away. And one thing I keep thinking is, if we had a crash, a market crash, a recession-sized big move, all this sideline cash that is very liquid, is it gonna prevent the collapse really into a crash if there's so many people waiting on cash? And general markets continue to rally, but we have seen overnight a small pullback on Bitcoin that is kind of decoupling from that move. Personally, I tend to see Bitcoin pulling back as a leading indicator. I tend to believe that Bitcoin has a lot of automated systems that take the pullback before general markets, but maybe I'm just being silly. Open interest source in SOFR call options. More investors are betting on a 50 basis point Fed cut this year. That 50 basis points is kind of a mixed bag in terms of bearish or bullishness. Many people say, well, cheaper money, that's bullish, no more questions asked. And some other people think 50 basis points means that something really cracked in the system and we are about to enter a recession deep enough to make everybody scared. The Fed Watchtower is showing no change 1.1 and is 98.9 with just 25 basis points. So it's completely out of the way that 50 basis points at least there. And in Polymarket, we get just a 2%, 1% less than yesterday. So somehow in Polymarket and in the Fed Watch, it's not catching that much of a 50 basis points, but it is in the open interest where it's reflecting that positiveness maybe towards getting a bigger cut. And Nikkei continues to rally over 3% to a new record high. We'll look into that in the charts in just a second. We need to look into dollar, gold, VIX, Nasdaq, S&P, and of course by the end of the video, we'll have a quick look at all the bigger stocks in the market. If you're looking for a broker to trade them, a really great one is VT Markets. I have currently a campaign offering 100% welcome bonus. In order to take advantage of that, use the link down in the description. Let's start with the dollar index, because yesterday it was looking in the red, but you can see that we are insisting against this resistance of 50 on the weekly. I mentioned yesterday that the structure on the RSI is very bullish, right? We have higher highs and higher lows, and we are against that resistance like nothing. So if we break this neckline of $98, $99, I still think that the RSI points towards 101. Once we get into there, we form a larger bullish pattern that if breaks above the 101.5 neckline, it could get us into $105 or into the full revenge rally of 57. Gold has slowed down putting new all-time highs every day, which is something that eventually it must do. You can see that every candle in here is in the green, so this is the first red candle that so far appeared in this area, bouncing off the 21 weekly. The 21 weekly is currently trading at 3.568, and we put a high of almost 4.4 and putting now an indecision candle, intra candle. Let's have a quick look at the liquidations of gold. We recently took the 4,000 that we were looking at that before getting into 4K. We identified it thanks to trading different, and now we took the 4.4, what's left on the table really. And you can see that there is a pull at 4.414. Those are the shorts that just entered right there, and they are placing their liquidity anywhere between 4.4 up until 4.7. But you can see that these pulls in here are way smaller than what we are living in the downside at 3.2 or at 3K. So there is a risk from the point of view of liquidity pools of coming back and taking the lows of the beginning of this last leg up. So far it's been up only, but let's just have a look at what we are living on the downside if gold decided that, yep, this is it. Very important to look at gold, because this, together with the cash on the sidelines, is the liquidity that we need to front run somehow, going somewhere else eventually when the need to run into safer heavens fades away, which I'm sure at some point will happen. We just don't know when. This is the way the market closed yesterday, so pretty much in the green. VIX, I insist, it broke out in here from a double bottom and is just retesting at 51. As long as we are above around 1863 to be more precise, this is accelerating to the upside, and it could put a push back above 25, which is my line in the sand for a fake crash. Well, in crypto there were 20 billion losses within this week there. So if this accelerates into here, it could be a lot of pain for a lot of assets coming in. I am not anticipating it to happen necessarily this week. I have no damn clue when it's going to happen, but I tend to lean towards another expansion into highs of VIX. Nasdaq and S&P closed very positively yesterday. S&P is slightly in the negative opening today, just 1 point below, pretty much equal than yesterday. And Nikkei at the very highs here with RSI 77, still no signs of a breakdown. Before we go into the stocks, let's have a look at what things are coming in to the market. Today I'm gonna focus on this set of events coming from Perplexity. Fed rate cut odds, 97% odds of 25 basis points. That is a bullish, it's got a bullish effect on risk on assets, including Bitcoin. S&P 500, the mood currently is very positive because we are in earnings season. Strong equities, broader risk on environment. We are seeing a little bit of decoupling against BTC, but that could be just temporarily unless Bitcoin corrects big. Sometimes Bitcoin anticipates something that might correct as well on the S&P. We cannot rule that out either. So that's another 7 is another bullish one. US 10-year yield at 4%, down from 4.02 as shutdown worries ease. That is also Polymarket calling for a sooner than expected stop of the shutdown. Here we have a neutral one with 5. Government shutdown, day 20, no resolutions, Senate block bill 11th time. Data blackout complicates the Fed markets, risk premium persists. We are still expecting to get the CPI data coming finally out on the 24th of October, so just 3 more days from today. There is the regional bank stress, that's a bearish one. Credit fears are idiosyncratic, but contagion worries limits risk appetite. Yeah, of course, because if you get a crash led by markets affected by banks, shutdowns, the whole floor will shake. And the most bearish one that we have today is the US-China trade war. An escalation equals global risk off, de-escalation, liquidity improves. Trump threatens 100% tariffs on the 1st of November, Malaysia talks this week. Let's go into the stocks. Let's have a look at how things are looking. I'm not expecting big changes, but just in case, let's see if we can find any stock that needs attention. AI is spreading across all the bigger stocks at the moment. We all know that. Google is also expected to increase earnings, but we'll see. There's tons of people speculating that the bubble is being inflated, that they are really not translating into actual returns for the company, and therefore it's just smoke what's driving the markets with AI. Apple shares increased 4.3% to reach an intraday record high of 263, resulting in a market capitalization of 389 trillion, positioning it as the second most valuable company after Nvidia. And Nvidia with 4.4 market cap in trillions, making it the most valuable company in the world. Still with a channel to the downside, and Apple bouncing off support, not yet putting a higher high in momentum, so that this could turn potentially into a bearish divergence on the weekly as we approach the earnings end of October. They all have some earnings coming in. Nvidia in this case is coming in on the 17th of November, so we'll have to wait a bit longer. Maybe by then we're gonna be in here in the channel. AMD has earnings on the 10th of November at the very highest, hitting the percentile of RSI 81 after a big breakdown in here. Amazon has earnings on the 27th next week and is right there trying to hold the support of the double top in here, the smaller one, but we could form a bigger double top with a neckline at 162. We are in a channel to the downside after a breakdown that has already reached the bottom at 30. Tesla is making an effort this week to break above the double top. We'll see if we can do that on Tesla. Palantir in a channel to the downside with a double top. Microsoft broke down. Meta 2. MicroStrategy, let's see if it can reclaim. Not yet. We are below the neckline now. Let's see if Robinhood can hold 65 and challenge the top of 78, or if it's gonna come back down into the bottom of the range. Earnings are coming for Robinhood on the beginning of November. To me, the most important thing at the moment is what happens with dollar and with gold. If we get a top on gold, we get some of that flow going into other things. The big question, the $1 million question, if some of that comes into Bitcoin in the last leg up in a topping year, and if dollar gets strong enough to get into 105, what could that do at the same time to Bitcoin being in a topping year? Dollar pumping is not something that Bitcoin is gonna like, but if we go into 105 and get to correct even lower, or if we break the multi-year support in here, then that's another thing. Thanks so much for watching the video. I'll see you in the next one. Bye bye.